Thank you for listening to Overleveraged, where we explore the big macro themes affecting investors, economic imbalances, giant geopolitical trends, tail risks and tremors, and everywhere risks are not being fully priced into markets. Remember, trading carries risk, and all opinions are provided as general market commentary only. Please do your own research. Our risk warning will follow at the end. Welcome to Overleveraged, and today I have with me John Hughman from Vox Markets, former IC editor. And we're going to be talking about geopolitics, which is, of course, a bit of a theme, an overarching theme for the podcast. But specifically, does it really matter? So do geopolitics really matter for financial markets in a sort of longer term sense? So clearly they have an impact at times, but does it really matter long term? I'm sure you've got lots of opinions on this. I've heard you talk a bit in the past specifically about oil, and I think we're going to talk about oil quite a lot in this episode. So I just want to start with, before I bring John in properly, Alexandre Dumas' novel The Count of Monte Cristo. News of an impending cross-border revolution in Spain leads to financial panic among French investors. Some of those investors end up selling their Spanish bonds at a great loss, and only to see the price bounce back after news proves to be erroneous. Sounds kind of familiar to many in financial markets today, which is really these big geopolitical events like we've seen between Israel and Iran, for example. They have a big impact, but they're maybe not that long lasting. What's your sort of take on the overall impact of geopolitics before we dive a bit deeper?
It's really sort of tricky to kind of sum it up in a very short sentence, because you know, over the course of many years, geopolitics obviously has an impact and shapes the way the world is and the way that you know, markets evolve. In the short term, it obviously affects sentiment, and so you see something like the conflict in Ukraine, which had a massive impact on the energy markets in the short term, which has had a massive impact on economies as a whole, and you know, really was one of the contributory factors, you know, in the sort of recent inflationary spike. But then, you know, you look at the trajectory of the stock market over years, and you would think it doesn't matter. So unpicking all of this is very, very difficult.
Well, that's hopefully what we'll try and do in the next 20 minutes or so. The first point, I think, is there's always geopolitical risk. That's self-evident that it's always there, but it does change over time. So we've got, for example, the Geopolitical Risk Index, GPR. So, you know, academics and financial market analysts have been trying to quantify it. And so this is the GPR by Caldera and Iacoviello. So that provides a sort of benchmark indicator for headline risks. And I've got a chart of it here, which I can show you. It's quite interesting.
Okay.
So it goes up, obviously, it spikes around.
Fluctuates.
Yeah, it fluctuates. But it doesn't correlate necessarily to, to markets. So we have to, there's equity markets, there's FX markets, currency spot markets often react quite instantly to negative events. We can see that. Equity markets maybe in more of an equilibrium between, good news and bad news. But trying to find a sort of direct correlation between how risky life is and the stock market seems kind of hard to do, despite the fact that we always see these headlines, Israel, Iran tensions weigh on stocks and that kind of thing. But ultimately, the stock market keeps rising no matter what geopolitical events there are.
Well, it does. But again, it sort of rises and falls, as these geopolitical events unfold and then morph. I watched your podcast with Andy Sylvester of CCAM, and actually, it's a lot of geopolitics and the way sort of it affects markets down to the headlines rather than what's actually going on the ground.
Narrative, so that's shaping the narrative idea.
Absolutely. What matters to markets? I think interest rates are, obviously quite important to what happens to the markets at any given point in time. But you just look over the long term, and markets survive all sorts of things. They survived the Second World War. They survived, the First World War. They've survived the Yom Kippur War. They've survived almost everything. And if you'd sat on the sidelines in fear of what may happen geopolitically, you'd be much, much worse off.
Yeah. So that's that's an important point. Is that should you be worried? Are you trading? Are you trading the markets? Or are you invested in them? And I guess if you're trading the markets, then there's clearly geopolitics plays a very sharp role in what you're looking at day to day. But longer term, maybe not so much. So
I think that's true. Geopolitics and trading, go hand in hand.
Yeah.
Yeah, an event like we saw at the weekend, with Iran launching a kind of puny drone strike on Israel.
Yeah.
Could had the outcome been different, it had a profound effect on the oil price.
Yeah.
Which it hasn't really. But traders will be watching this stuff. It's minute by minute. Day by day. But investors, I would say, whilst the longer term impact of geopolitics is lesser on the sort of longer term trajectory of stock markets, it can affect how well companies perform over a sort of medium to long term. So look at the geopolitics behind China that we spoke about recently, and how that's affected individual equities. That it can have an impact on positions that you may have thought you would hold for the long term.
Yeah, so I mean, if you look at the Chinese stock market is a great example. That's where you would think that actually there is a longer term impact from the geopolitical tension, strain, whatever sort of noun you want to use to describe it, from the China-US tensions.
100%.
And that's a geopolitical thing, above all.
Yeah, but it could have an impact on, for example, the Australian market, where you've got a lot of big resource production, which has been bought by China, historically. Very big customer, China, of Australian commodities exports, and geopolitics can shift that. Yeah,
and I guess there's always all the different things are interacting. So I think I've got State Street investors here. Instant negative impact derived from a specific geopolitical event occurs, but it typically recovers over time. The stock market. But the big challenge is to isolate geopolitics as a return driver, because a stock market index encapsulates an enormous amount of information.
Well, it's a factor, isn't it? It's one factor in many factors that as State Street rightly pointed out there, affect stock market index performance.
Mm-hmm.
It sort of matters and it doesn't matter. It's very odd, but that's how markets are.
It doesn't matter until it matters. Yeah, I mean, there's former Citigroup chief global equity strategist Robert Buckland was writing in the FT with some interesting points. As an equity strategist, he learned to be aware of geopolitical risks but not over obsess. And nobody sees geopolitics as a reason to be bullish. It's always a risk. You're never looking at the geopolitical situation thinking, well, that's calm. That's good. You're always by default, by its nature, you're looking at it as a risk, not the status quo being supported.
That's true, and that goes back to the point that you and Andy Sylvester were making about the media.
Yeah,
and the impact there. But if you think about sort of geopolitics going back, slightly longer, and for example, Nixon and his famous visit to China many years ago, and what that did.
And that was a positive
catalyst. The trajectory of geopolitics and China's integration into the global economy, and what that's then done for the way that companies operate and call for corporate profitability, in terms of the ability to outsource production, a transformational moment in geopolitics that arguably affected companies' ability to generate profits and affected the trajectory of industries in a massive way. So there's a positive.
Yeah, and I guess the end of the Cold War might be a similar, the fall of the Berlin Wall and so on. I think because it is important to look at the different ways that geopolitical events can affect the market. It's not just we're a bit worried about what's happening there. It's there's trade channels can hit the volume of regional global trade, and that can lessen demand for a particular currency or a particular commodity, or it can increase or it can shorten the supply of a commodity. We see that particularly in the Middle East with Iran and Israel and the potential closure of the Red Sea. That's one of those things that gets talked about there.
Well, we spoke about India and China last time. And this sort of the impact on, as you say, trade flows of sort of geopolitical repositioning and the move of certain bits of production into countries like India and Vietnam. So it reshapes, political events, geopolitical events can reshape the way that trade flows and be very beneficial or negative for one country, China, which we're seeing showing up in the stock market, but very beneficial to another, India or Vietnam, which is showing up in theirs.
And that goes into the next channel, which is capital flows. So geopolitical events can affect capital inflows from non-residents or trigger outflows, and again, that pertains to what you're saying there.
Hong Kong is a classic example. Capital flight from Hong Kong when obviously China's intentions towards it changed markedly not too long ago.
Yeah, I mean, there has been a big shift there. So, and then the third channel is the macroeconomic channel, that affects the outlook on particular governments, fiscal position, whatever, I guess, Ukraine and Russia, you look at, that's a big macroeconomic thing where you look at, well, can we invest in either country anymore or surrounding countries and so on. And then I think the fourth one is maybe the key one for the market, in terms of the direct market impact, the initial market impact is the confidence and sentiment channel. So that's, how it affects overall risk sentiment. Are investors piling into gold? We've seen a big geopolitical, and ever October 7th is the bottom in gold, and it's been racing higher ever since. And that is a geopolitical premium for sure, because it's completely decoupled from interest rates. And that seems to be what's driving that. But I think there's a key point about the geopolitical angle here, which is, affects markets in a sort of, short-term way or medium-term way. But does it affect economies maybe as much as it used to? And I think one of the key things that's changed is the oil price and the impact on the oil price. So usually, the obvious way that geopolitical risk shows up is higher oil prices. But that does not feed into necessarily a tougher stock market or a tougher economy like it used to, because economies don't rely on oil so much.
I mean, I think the example, the recent experience, what happened to gas prices in the wake of Russia's, special operation in Ukraine, sort of suggests that they do. And I think we're still feeling the lingering after effects of what happened. The cost of living crisis is almost a direct result of that. But obviously, each country experiences it differently. So I think what we no longer see is it's not a one size fits all response to geopolitical events. I think we do see areas where certain economies are able to cope better when these things happen.
I think it's interesting with gas prices, because gas prices are not, it's not. There's different markets for gas in the way that there's not for oil. I mean, there's different grades of oil, but gas markets are quite separate because it's very difficult to transport it from one continent to the other, or has been. It's becoming easier, I think. But so the oil price and the gas price, you saw divergence then because the US could still pump its shale. It wasn't that's still there. But I think the fact that energy intensity has declined so much that for each unit of GDP you need a lot less energy than you used to in the developed world means that immediate lever, that immediate transmission channel of geopolitical risk, which is the oil price, has less impact than it used to.
Yeah, that makes sense. That makes sense. And you would hope that it would continue to do so, as we move towards more renewable solutions. But then, one of the big sort of responses to one of the big ways in which we could get away from a sort of hydrocarbon-based economy is to increase our production of nuclear energy. And now there's some geopolitics behind that for sure. Where do you get your uranium from?
Russia,
Australia. There's parts of Africa, and Canada. So this and that market has has exploded. Excuse the pun. And no pun intended.
I think we had a nuclear joke in the last episode, actually. So it's two for two.
But you look at the companies that are involved in uranium mining, and in the UK there's a company called Yellowcake, which buys and stores uranium. Its shares have skyrocketed.
Right.
So there is for all the sort of reduction in the use of hydrocarbons, there are other angles that geopolitics affects still.
And I guess that's that. I think what you're talking about before about how geopolitics can affect individual sectors of the market in a much more longer term way than maybe the headlines suggest. So the index will go up. I mean, it just goes up. I mean, I think just off air, you're quoting figures about the number of companies that actually survive, that actually delivered the returns for the market is quite small. We can look at the index, but the index doesn't tell the whole story, and individual sectors can be fundamentally affected by a geopolitical event or a geopolitical risk factor that investors are starting to look at. And I guess uranium mining is a classic example.
Yeah, defence has been an incredibly strong sector.
Yeah.
Obviously, over the last couple of years, incredibly strong. There is a lot of spending that's going to go into that, and that's obviously a direct outcome of some of the geopolitical trends that we're seeing.
I mean, so it's probably worth talking about oil because we've talked about it. But it's not gone up that much. The Iran-Israel stuff that's happened, and the Red Sea has remained open despite problems there. There's US shale. The US is now pumping record amounts, and it can act as the sort of swing producer like it couldn't in the 70s. So in the 70s, I think I'm quoting Robert Buckland again. So back in 73, 74, the oil, you had that OPEC embargo. Oil rose 300%, and the S&P index halved. Gulf War 1990, that's another spike in that GPR index. Oil doubled, and the S&P fell 20%. But this year, of course, oil's gone up a bit, but so's the stock market. And in fact, wherever you look, except just the UK is just about the FTSE 100's almost hit a record high, but everywhere else has been knocking out record highs despite the geopolitical risk.
Yeah, but look at what makes up the FTSE 100.
Yeah, so this comes down to the makeup and the fact that a handful of tech stocks can drive the US market,
and a handful of miners, banks, and
they operate independent of geopolitical risk.
Arguably, sort of, it's there, but arguably yes. It's interesting. It's.
I'm just. So I mean, should we be bothered about geopolitical risk? I mean, do we care whether? I mean, obviously we care from a human point of view, but do we care as an investor what's going on in the world?
It depends how you approach investing. If you are a trader, then you've got to pay attention. If you're buying the index and through all world ETF or some MSCI all world ETF or whatever, then just don't worry about it. Sit on a beach. Yeah. and if you're trading in buying individual equities with a view to holding them for the long term, in a portfolio, then you've got to pay a little bit more attention because they can affect the trajectory of individual shares. And as we know, shares can get knocked out over time by trends like this. So it depends how you investment approach.
sit in an index fund basically.
That's what Warren Buffett would do.
That's what everyone else. I mean, that's what kind of everyone does, and I guess that's why it all keeps going up. So. So basically, the long and the short of it is that we shouldn't worry about geopolitics.
No, not really.
No,
shouldn't read the newspapers either.
No. Just bespoke investing podcasts and
absolutely.
so on. Yeah.
I'll tell you what I would say. The one thing I would say about oil is that there is another profound sort of geopolitical initiative that is taking place, and it's sort of a Congress of Nations, and that is the initiatives around the continued reduction in energy intensity. Arguably, things like COP and the energy transition are a global initiative. So there's one that you could argue will have a positive outcome when we work out how to do it.
If we do it. There's a couple of other aspects of geopolitics which it's the transmission into fiscal and monetary policy, which is Are we, in the words of Bank of America, which I think I quoted last week, financing domestic bliss and foreign wars? If you're having to finance Ukraine and Israel and maintain a 6% budget deficit for a decade out, and you're running $1 trillion in debt every 100 days extra, that has an impact on your fiscal policy. That is your fiscal policy, but it affects your monetary policy, which affects interest rates, which affects everything. So it does all play into each other, but any one independent geopolitical event can often be a case of a flash in the pan, buy the rumor, sell the news type event.
Precisely.
Yeah. Oh well, and on that bombshell, so to speak. On that note, thank you, John Hughman, for coming in as always. And that's been a very interesting chat about geopolitics and how it impacts markets. And we'll be back next week, I think, hopefully, to talk about the UK and why we should be a lot more cheery, maybe, than some of these geopolitical type headlines might lead us to believe. Thanks for listening. Be the first to listen to Overleveraged by following the Overleveraged podcast directly on Spotify, Apple Podcasts, YouTube, or wherever you get your podcasts. That way you can listen to our content as soon as it drops every Thursday. Thank you for listening. Remember, all opinions, news, research, analysis, prices, or other information is provided as general market commentary, not as investment advice, and all potential results discussed are not guaranteed to be achieved. The information may have been derived from publicly available sources, company reports, personal research, or surveys. Past performance is not indicative of future performance. Trading carries risk of capital loss, and the service is available to professional clients only.